Bitcoin stumbles and alts pump alongside a USDT ban and Trump transition FUD. Hey guys, it's Keith Allen. First live analysis of the year. Glad to be back. And hey, hope you are too. Hope you had a great 2024. Had a fantastic holiday and end of the year. Hope everybody ended profitable. It was pretty difficult, in my opinion, not to end the year profitable. But 2025 may not be quite as easy. It looks like we might be on a little bit different trajectory, or at least maybe transitioning into something different here as things develop here this first week of the year. Yesterday, not a great day across the market, both TradFi and crypto. Today, getting a little bit of a recovery here, and I think that markets wide, I would say, there's a little bit of lore, I should say, about how the market closes on the first trading day of the year. This is kind of a TradFi thing. First day, first week, first month kind of sets the tone for the rest of the year. Well, yesterday was not great. We'll see how the week ends, at least for TradFi today. And I think the more important thing to look at is where the market ends at the end of the month, how the month closes, and maybe that gives us more insight into how things will develop from here. Live chat is open, by the way, on YouTube. If you're watching, I'd love to have you join me. I always enjoy engaging with you guys. And before we climb in, as per usual, do me a favor, smash the damn buttons. Hit the like, hit the share, especially invite somebody in here who may not have been watching, following along. That helps us grow the channel, of course, and hopefully share some insight with some friends. And of course, if you haven't done so yet, please hit that subscribe button so you don't miss any of the streams. I'm going to continue to do these on the regular here throughout 2025. You guys have been great. I really do appreciate the support, and I will continue to deliver to the best of my ability. With that, let's climb in and start looking at charts here. I want to start out here, I think, on a candle chart for Bitcoin, and we'll look at BTC Dominance. We'll look at what the USDT Dominance situation is, and why maybe we're seeing alts pump as opposed to Bitcoin working back towards new all-time highs and back into price discovery. So let's figure out where we're at here. Let's go to here we go. That's not the right one. Bear with me. Here we go. We're going to start here on a trend precognition chart. Going to show some signals. You remember as we were wrapping the 2024 analysis, we talked about those signals I look for on higher time frames, and we do have something to share there that we can share with you. And so let's go ahead and start there, right? So I'm going to go ahead and share that candle chart here on TradingView. And we will look at what's happening now, but we're also going to zoom out into higher time frames and see if we can gain some insight as to how things might develop this month and beyond, right? So starting here on the candle chart, you can see I've got lots of stuff going here. I'm watching my VWAP, has been watching that pretty closely here as well. But my favorites here, this was from something else. My favorites here are the 21-day moving, or the 21, I should say, moving average. The 50, the 100, and the 200 moving averages here. We look at those across our major time frames here. And as you can see, here on the daily, we're actually headed for a death cross between the 21 and the 50. That's not good. We're also looking at back-to-back rejections from this 21-day moving average. Also not a net positive thing for the outlook of Bitcoin. But these things can be temporary, right? This is a transitionary time. And I say transitionary because, and this is, I think, something that's kind of overshadowing the markets right now. We are just a couple of weeks away from the presidential inauguration, right? Where we transition from the current Biden administration into the Trump administration. And obviously, we have been enjoying quite the rally since Election Day on November 5th. The Trump pump, if you you will. And that seems to be fading here, at least for the time being. And that's something that we expected. There are a couple of things that we expected to happen, and they are starting to develop here. One was that if Trump did win, we expected a rally, which we of course got. We also expected things to settle down, and then for Bitcoin to pull back. Once things stabilize, then we would likely see the market return to its whatever the trajectory is supposed to be. And so at the moment, we're seeing that cool off. We had an all-time high above 108K, and that all-time high was also not just above 108K. It was above the 1.618 fib. And I think I have that open on a chart somewhere, hopefully. Maybe I have removed that here from this chart, but I can redraw that here in a second if I need to. So we had an all-time high up here. This was a 1.618 fib level just below that, and so we peaked. Something interesting here about the date that we peaked. You'll notice here at the bottom, December 17th was the top, and guess what? That's something else that we've talked about. The days of macro trend reversals or major macro moves, if they weren't reversals, they were extensions, but they were major macro developments that happened on December 17th, year after year. Starting in 2017, when I started monitoring this is when I started trading myself. So this is how I got clued into this. We had a big reversal with our all-time high back in 2017. We had a reversal from the bottom in 2018. 2019, things started to recover. We were interrupted by a COVID crash, but then things went back on to its normal trajectory in 2020. 2021 on December 17th as well, we had a breakdown through the 200-day moving average. 2022, slightly different, off by a day, but that was our last flush below the 21-day moving average before we bottomed out and things. Actually, we bottomed out before that, but we did get one last flush, and then boom, off to the races here. 2023 support tested the 21-day moving average, reclaimed the 0.5 fib, and off we went. Yeah, here's that 0.618, 1.618 I was looking at. That is right here. We were rejected. We cleared it for a hot minute and then rejected. This was the new all-time high. So one of the negative things I would say, or the bearish indicators that I'm looking at, is that this pattern, which is, I don't know anybody else that has identified this, but this is something that I've been following along, and there's no denying that there's a pattern here. So whether this ends up developing into a deeper correction, or whether this ends up being something similar to 2022, where it was that last flush before things moved back up. Now, while this does indeed look bearish, there are different perspectives we might look at that are a bit more bullish. And one of those is going to be a zoomed out view of the halvings. Okay, let me take this to the weekly so we can get a better perspective here. And based on history, which is something I think is important. Historically, it looks to me like we are still very early in the cycle, and historically, we see more upside after the halving. And so, yes, we can have big dips. We've had them in every single bull market since the beginning. So we've been waiting for this. We've been waiting for these 20, 30, 40, 50, 60% corrections to happen, and it hasn't happened yet. And so I do think that, potentially maybe that could be something that's happening here. If you remember back in 2021, we had this mid-cycle top, and then we had a dip. This was a 56% move to the downside, and then price came back, right? Tested support on key moving averages, and then price rallied back to a new all-time high. We could see something very similar. Now, this could have been the mid-cycle top here, but that was the 2021 top. So I don't think it was, right? This is where we broke resistance finally. This could be a mid-cycle top. We could see a dip back down into any of these key moving averages, as far as I'm concerned. The macro trend is still intact here. This is bullish to me. The fact that we're above all of these key moving averages on the weekly, still bullish to me. And the fact that we have most recently held this support test. Now, this is on a weekly time frame, but we've tested this several times here on the daily as well. This is now 1, 2, 3, 4, 5, 6 weeks of testing at that 91K level. And so far, price is holding. So those are, we can speculate about how the administration may change its approach to things and how that may impact the market. But what we can't speculate on is what the charts are showing us, right? It's clear. Support, 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 support. Now, once this breaks down, or if this breaks down, then we have different targets we need to look at and we need to consider, including each of these prior levels. I would first look to this 86K level, which a lot of people were expecting before the end of the year. It didn't happen. So know that the market is not here to do what you want it to do. It's here to do, well, quite frankly, it's here to try and take your money. And so you need to be aware of that, and you need to be aware of what the potential moves are in each direction so that you are prepared to trade whatever the market serves you. And so I do think that in terms of looking for that deeper correction, there are a few things that we need to look at, right? So we look at these key moving averages. As you can see, they're still in pretty good shape here on the weekly chart. But on the daily chart, there's a bit of bearishness coming in where we see an imminent death cross between the 21 and the 50-day moving average. And that's the VWAP right here, this pink line as well. I'll take that out just to eliminate some of the noise, but I have been using that as an indicator and a place to mark some of my stop losses, trailing stop losses that I pulled into profit. So I did close a little bit, a couple positions on the overnight. Of course, we've recovered from that at this point, but I'm okay, right? Profit is profit. And so those were high entries that I didn't want to dip down. And so I'm totally fine with that. I do think that we could see a greater breakdown here. And the reason why, and this is interesting here because this is kind of a changing thing. We have seen indicators, including our own trend precognition on the monthly chart here. Now, I looked at higher time frames, and this is the only one that's showing up at the moment, right? So we have this signal here on the monthly. This is a tentative signal. It has lots of time to play out and change and develop, and it's actually changed quite a bit. When it first appeared, really right at the monthly open close, right? And those signals that appear right at the open close tend to have a higher probability of playing out. And this one actually started out very, very strong. In fact, if I go to another chart, I can show you a strength meter that will give us some more insight. So let's go here where we can see the strength meter, and I'll take this to the monthly. So you can see the arrows here. This is the trend precognition A2 plus algo. This is the strength meter on the A2 plus, and this is the A1 algo for trend precognition. It shows a different, it works a bit differently. I like to use these in conjunction with each other. So in terms of some bearishness and a tug of war between bulls and bears here, we do have this signal. You can see it is now, this red line here on the strength meter is at 50%. So it's below 50%. It's actually closer to about 35%. Let's see, it's at 30% now. Okay, 30.55% strength on this signal. And I can tell you that when it first appeared right at the market close, excuse me, the monthly close open, this was a higher 55%, 58%, something like that. Okay, so this red line extended up to here. And so it's losing strength, which means that bulls are gaining a little bit of momentum here, and this bearish momentum is losing strength, which is a positive sign here. This could completely invalidate, and to do so, this doesn't. So just a bit of clarification. It's not just that price isn't, is going to go down necessarily. It's that price is not expected. This is indicating that price is not expected to go higher than this high on this candle, which is our all-time high, 108K, 108.3K. And so this is indicating that price is not likely to go higher. Now, when it started out, it was a 58% probability the price wasn't going to go higher. Well, now that probability is reduced to 30%. And I can tell you that just this morning, it was at 33%. And now a few hours later, it's down to 30%. So this signal, it is at risk of invalidating. And I have a threshold here. So if this gets below about 25%, the probability gets below about 25%, this is going to disappear. And so I'm going to keep an eye on that. I'd be happy if it disappeared, because that means that we're going to get a pump. Now, some of the things that influence that are liquidity in the order book, and we've seen quite a bit of jockeying around here in the past couple of days. Liquidity moving, liquidity getting pulled, liquidity getting moved. And as you can see here on the weekly chart on fire charts, we have that happening once again, right? We have rungs or ladders rather, and walls moving up and down and kind of tricking the market. Yesterday was a prime example of that, where we had bids coming in. Do I still have any of those artifacts left here? No, it's going to be on the weekly. Let's see if I can find what I was looking at yesterday, where we had some bids come in. Yes, we did. This was yesterday, right? We had this block, a ladder, if you will, of Bitcoin bids came in. There was a little bit of pump, but not really. It didn't really have the effect. I call this liquidity herding. So then they took a block of this and they moved it up here, and it wasn't a lot, right? It was like $4 or $5 million bucks. And it's pretty surprising to me that we could move the market with that little bit amount of capital in the order book, but it did, right? You can see as soon as it appeared here, price started to pump, and as soon as it got pulled, right, they pumped it right into their asks. Right once their asks got filled, they pulled it, and things started to level out here. And then, of course, we saw some bids come into this place here. So this is what we're dealing with now, right? So on the lower time frame, we have resistance here at 98K, but some of this has been pulled, which maybe opens the door for more upside. And now you can see bids moving, blocks of ask liquidity starting to move higher. Let's zoom out and see if we can see any like major changes in liquidity placement here, in the deeper, with a broader, deeper view of the order book. Here we go. Let's zoom into this a bit. This gives us some good perspective here. You can see, and I may or may not need this. Okay, so you can see that we have right here a significant amount, almost 200 million in ask liquidity right here at this 100K level, and another rung above that at 110 million, which would be a new all-time high, and not a great deal below us. Now, don't be super concerned, because the fact that we don't have a deep ladder here, when we get these deeper ladders of bid liquidity down below, and you can see it if I highlight this a bit, is when we get those pumps, right? So we do have a decent amount of bid liquidity in the near range, but it could certainly take us deeper, right? Here's that 86K that we talked about as a possibility. And of course, here's 91, the top of this range, where we are currently finding local support. Going deeper, nobody really wants to, let me rephrase that. No bulls really want to see a move down to 66K, but there is a small buy wall down there, about 15, 16 million. So this at the moment makes me feel like in the near term, we're going to hang in this range, maybe chop in this range. Inauguration day is coming up on January 19th, I think, 19th or 20th. And so maybe we see a bit of volatility around that. Is it going to be, if the market is pumping, will Trump be the inauguration be kind of a buy the rumor, sell the news event, or if the market is dumping, will that be like the rescue plan? And the guy likes to react to those things, so it's going to be interesting to see. Certainly too early to tell where what the market's going to do based on what the new administration is going to do, because yes, promises have been made and hints have been given, but you never know until they finally get there. And one of the big things that the Trump administration has talked about was being very pro crypto, Bitcoin, and the talk of a Bitcoin reserve. Now, there's two approaches to this Bitcoin reserve, and I think that this could take this could really have an impact on how the market digests this and reacts to it. Senator Cynthia Loomis, has proposed a bill where the U.S. would use the gold reserves to buy like a million Bitcoin. I think that's the number, something like that, over a period of time. That's obviously bullish if the U.S. government is going to start committing funds to buying more Bitcoin. The other approach, and I think this is Trump's approach, is to just hold the seized Bitcoin and likely to seize more. Okay. And so there's two different ways to do that, right? Seizing Bitcoin is not going to boost the market, right? Because it's not adding any capital into the market to buy that Bitcoin. It's not taking any Bitcoin out of circulation that isn't already available. And so those are two very different approaches that I think could have two very different results. Now, another thing that's happening at the moment, and I think has a lot to do with the price action that we're seeing here, and the reason, quite frankly, that we're seeing alts pump, is the change in USDT dominance and BTC.D dominance. So, what's with the USDT dominance? Euroband, for anybody that's been under a rock or hasn't heard. The European Union has banned USDT effective last week, effective December 30th. So those traders in European countries can no longer use USDT. Now, USDT is the number one stablecoin by a long shot, right, in terms of liquidity. So that's going to eliminate a lot of or could eliminate a lot of liquidity in the market. However, it doesn't look like the liquidity has left. It just looks like it's rotating into other things. And you would expect that it would either rotate into Bitcoin or other stables. And I'm sure some of that is happening, but what we're seeing in mass is that it is rotating into alts. And the reason I say that is we can first look and see that Bitcoin dominance is indeed falling, and it started falling exactly after that ban was put in place. That was on Monday, December 30th. Ban goes in place, and we see a progressive decline in Bitcoin in USDT dominance. Now, you would expect maybe we would see Bitcoin dominance to rise, but that has not happened. In fact, Bitcoin dominance also declining here. And I'll say again, I think that this is largely due to FUD, swirling around relative to how the Trump administration is going to impact the economy, impact the markets, and impact the economy, because he can be as pro crypto as he wants. But if tariffs, for example, have a negative impact on the economy and have a negative impact on inflation, then we end up being right back in a risk-off scenario. So I think that currently we're on a risk-on scenario, but I think that there's some speculation and concern that, hey, maybe things aren't going to be as good as we had hoped. Maybe he's going to under-deliver on promises. And so it's kind of a wait and see. In fact, today, there's a vote and a debate on who's going to be Speaker of the House. Will Mike Johnson, hold the gavel? And that is that's the Don's boy. So going to be interesting to see if he holds that position and whether we see any opposition to that. That vote, I think, is coming up later today. So that's also some of the mess that goes on here in U.S. politics that could have an impact on Bitcoin. So we talked about the euro ban on USDT and the drop in USDT dominance. I would expect this to continue to do so. Now, we also have kind of a line here in the sand that I'll be watching to see if it breaks down even further, right? This level has held for quite some time, since back in March of 2022. So it'd be interesting to see if we triple bottom here or quadruple bottom here, and bounce or break through, and be interesting to see what that would mean for the broader market. There's talk of an XRP coin, a Ripple stable coin developing and coming to market. And so we are not surprisingly seeing XRP pump right now. Let's take a look at XRP. Speaking of which, speaking of Ripple, this is one of the coins that is making a big move. And I'm going to look at the XRP USDT chart because that's where I have all of my geometry. And look what's happening here. Look at this freaking candle here on the monthly. Oh my gosh. Let's see if this, when did this begin, right? So again, Euro ban ends, Euro ban on USDT begins here. We have more thought on a potential XRP stable coin making its way into the system. And there's even been talk of payments on the X platform. And I think, obviously, Doge has been floated over there, but so has there's been rumblings of Litecoin and rumblings of a Ripple stablecoin being used over there. And we are seeing those results right now. Seeing the fact that Ripple has actually cleared the 21-day moving average here is a very positive sign. It's one that we haven't seen from a lot of coins. Let's look at Solana, which also has had just an amazing year, but it's running into resistance right here at the 50-day moving average, as a lot of coins are, including Bitcoin. So going to be interesting to see if it can break this 50-day moving average and continue back on its trajectory towards all-time high territory. What else? Litecoin. I have a Litecoin chart open already, I think, over here. And Litecoin also, as you can see, working its way on today, breaking above that 21-day moving average. Now, the bad part here is we have a little death cross happening here. So maybe this will be a short-lived death cross, and this pump here, which is right now a 5% candle today, can help pull the 21-day moving average back up. Lots of potential upside here for Litecoin, in my opinion. Still a coin that I like a lot, just in terms of fundamental strength and use cases. All that is based on use cases. Lots of payment platforms incorporate Litecoin for payments, and it has just a fantastic track record. What's another one we could look at? We can look at, we're not going to do it on this chart. We'll go back to the trend precognition chart, and we can look at Doge also doing well today. That's another one that is being touted as a potential use case on the X platform, and it also finding resistance at the 50-day moving average. What's another one? How about Polygon? I still like to call it Matic. I trade it on Coinbase. They still call it Matic. Um, and we will look at that one. It also has lots of potential upside, but um, has to first overcome this 50-day moving average. You can see that death cross has already occurred, and maybe again this can pull it out of that loop after some time. It's going to take a little while for this to happen. It's not going to happen tomorrow or even next week. So these are kinds of the things that I'm watching in terms of how things are developing. Right? Are these alts are we going to get like the real alt season that we anticipated was coming when we saw that pumping in November? And one of the things that I look at for that is where we are in Bitcoin dominance. Right? I mean, things were really soaring. Remember, November 5th was election day, right? And we really saw things happening ahead of that. And as that happened, we saw Bitcoin dominance dropping, right? This was election day, November 5th. We saw Bitcoin dominance drop, drop, drop. We got a pump back up. And then things really started to break down around about the week before Thanksgiving. And then we got this recovery. Recovery was rejected at the trend line, a fake out wick here, which seems to be the norm in crypto. And now we're back to a declining Bitcoin dominance. I expected that, for a real alt season to occur, that we would see Bitcoin dominance drop below the 50% level. So that's this green line down here. That's something that I'm also watching very, very closely. So lots of things to keep our eye on. We can speculate on how the new administration is going to impact the market, but at the end of the day, it's what happens in the charts that really tell us the best story, in my opinion. And this is a positive for a potential alt season developing. But I would say that there are no sure things. I'm still of the belief that the bull market is not over yet, but we have to watch these signs to see if there's a potential breakdown. And if this is going to develop, into just that deep correction that we were looking for, or if this is going to develop into a full-fledged, bear controlled situation here. I think fundamentally we're still quite bullish, and structurally things look good in terms of remaining in the bull. Oh, how did that just go away? But that did not do what I wanted it to do. But I think that we should. Here we go. This is. Oh my gosh, how many times is this going to switch on me? Come on, TradingView. I love you guys. If I talk good about you, maybe you'll not do that to me. Let's go back and zoom this out. And really, this to me is the greatest perspective we can get in terms of where we sit in the grand scheme of things. Right? Still very early in the halving. Yes, we do have this pending trend precognition signal, but it is losing strength. Not only by the day, but today by the hour, it's been losing strength. So going to be interesting to see if this can hold. A move back to the all-time high would invalidate it, of course. But that's, fundamentally speaking, what looks good. I showed you what looks bad. And collectively, I think this is a time to maybe look for those alt opportunities, right? And to play it very, very closely, right? Because this could all go south after the transition on the administration. If the economy takes a hit, that's not going to bode well for crypto, even if we do have a crypto-friendly administration and a crypto-friendly regulatory environment. So we got to keep watching this stuff closely. And I'm going to continue to share charts and data and insights with you guys, and hopefully we can navigate through this all together. With that, I'm going to wrap it. If you like the content, do me a favor. If you haven't done so yet, smash the buttons. Make sure you subscribe so you don't miss another one. And if you're interested in any of the tools, you can check them out at materialindicators.com. Links are down below in the description of the video. Thanks again for following, guys. Let's make this a fantastic year. Hope it hope it is for you, for all of us, quite frankly, a joy-filled year of happiness, health, and wealth. Let's make this our best year yet.